This is King World News. I'm Eric King, and you're about to hear an interview with Senate candidate Peter Schiff, president of Euro-Pacific Capital. Remember to go to our homepage at www.kingworldnews.com for more interviews. For this week, we also have an absolutely incredible interview with the legendary Mr. Gold, Jim Sinclair. Also, Matt Simmons, who is one of the most respected individuals in the world dealing with the energy sector. And on the Gold Plus page, we have our exclusive weekly metals wrap with Ted Butler. Joining us now is Peter Schiff, Connecticut's Senate candidate and president of Euro-Pacific Capital. Peter, I want to start with gold. It's over $1,100, and you've been right on this for quite some time. And, of course, the Indian purchase of 200 tons of gold by its central bank was significant. What were your thoughts when you saw that purchase, Peter? Were you surprised by the Indians beating the Chinese on that gold?
Well, I knew that a central bank was gonna take that gold. In fact, when the IMF first announced that they were going to sell significant quantity of gold, there were a number of people who thought that was a negative for the gold market because they thought it would suppress the market with the supply. And my thoughts at the time, and I mentioned it, on my radio show or on television, was that there would be no problem, that if the IMF was stupid enough to sell that gold, that there would be plenty of foreign central banks, particularly countries like China and India, that would be more than happy to take it off their hands. And I actually thought there might be a bidding war for that gold, and they actually might pay higher than the market, because it's an opportunity to buy a big, chunk of gold without pushing up the price, which is what, the Chinese have already said. They're already on record as saying they want to buy more gold. They just want to do it without pushing the price up.
What kind of support is that going to put in the gold market? Because there's people looking for the next shoe to drop there, and what you're saying is don't expect that anytime soon.
Now, I don't think there's a lot of downside in gold. I mean, I think that it's possible that gold can pull back. It can even go back below 1,000. Right now it's around 1,100. But I don't think there's a lot of downside. I mean, we've been in a bull market in gold for 10 years now. I mean, 10 years ago, gold was around $250, $270 an ounce. It's gone up now, over 3 times, closer to 4 times. Meanwhile, stocks have actually lost value. The S&P is 20% lower than it was 10 years ago. So people have been moving money, out of paper into gold for a decade now, and this trend is going to go on for probably at least another decade. I think gold's going a lot higher over time and with a lot less volatility than stocks.
Will the Chinese be buying gold in the future, Peter, in this kind of bulk purchase? Because, as you know, they have only 1.5% of their reserves in gold.
Yeah, I mean, they're going to look, ultimately, they're probably going to have more like a third of their reserves, if not more, in gold, which is, what you find in developed markets, countries, like Germany or Switzerland or even the United States. I mean, we keep the bulk of our reserves in gold. We don't even have that many reserves, actually. Our reserves are pretty low compared to most countries as far as total reserves. But countries need to have gold behind their money because otherwise there's nothing behind it. It's just paper if you don't have any gold backing. And so China needs to buy a lot of gold. Now, the Chinese produce a lot of gold. They're actually now the world's biggest producer of gold. They passed South Africa. So what's probably going to happen is the Chinese are going to end up getting a lot of their gold from domestic producers. But, of course, that gold is not going to be on the market, and so that will further suppress the supply of gold for the public to buy.
For the Chinese to get to a third, as you said, and I think that's a good goal, what kind of accumulation are they going to have to do? Have you quantified that, or do you have any idea?
Well, they're going to have to buy a lot of gold, but, of course, the price of gold is going to be rising. And so as the price rises, gold automatically becomes a higher percentage of their reserves.
Correct.
As this price goes up. I mean, if the gold price went up tenfold and the Chinese didn't buy any more, that would already bring the gold percentage, up above 20%, 20-30%, just on appreciation. But I think they don't want it to necessarily happen that way. They want to control more ounces. They want to protect the value of their reserves, because right now they have no protection because the bulk of their reserves are U.S. dollars, and our currency is going down the drain.
Do you think, Peter, that the U.S. really has the gold it claims it possesses on the books?
I hope so. Politicians lie about a lot of things. Let's hope that's not one of them.
What about the U.S. dollar? You've been correctly bearish on that for some time, and it does just continue to dwindle in value. Do you see any kind of counter-trend rally, or is this thing just going to keep sinking?
Well, we always get counter-trend rallies. I mean, the question is, will it be significant? I mean, we had a very significant counter-trend rally in late 2008 that lasted until March of 2009. I don't think we're going to have another rally of that significance anytime soon. We could certainly have a 5 to 10% pop in the dollar, at any time. And when the dollar index hit a new low yesterday morning for the year, But, given the monetary policies that we're pursuing and that we're likely to pursue, and given the fiscal policies, particularly a lot of the new legislation that the Democrats in Congress are threatening to cram through, in particular this new bill by Chris Dodd on financial overhaul regulation for new government agencies, on top of the health care bill that he's helping to cram through, the dollar can only go down, because all of this government spending, not only does it undermine our economy and make us less productive, but it's all paid for by printing money, by creating inflation. So you're destroying the demand for, the dollar. At the same time, you're increasing the supply. It can only go down.
The unofficial rate of unemployment, as you said in your vlog, is 17.5%. How bad is this going to get if we continue down the road of our current policies?
Yeah, and first of all, that 17.5% comes from the government. It's not like, we're trying to say that there's a conspiracy here and that's the real rate. The government publishes that rate. And what that rate does is it includes the people who are unemployed but who are so discouraged because they've been looking for work for so long that they're not even looking anymore, but they want a job. They're just not looking. They are not being counted. And, of course, there are a lot of people out there who are still looking for work. But while they're looking, they took some kind of part-time menial job. Let's say an engineer is out of work and he used to earn $70,000 a year, and now he took a job working part-time as a fry cook in McDonald's at minimum wage. But he just did that so he can, make ends meet better while he's looking for full-time work. According to the government, that person is no longer unemployed. But, of course, they are. But that other number, the 17.5%, counts that guy. And so that's more representative of how much unemployment is really out there. And that's a lot of people. And you know what? It's only going to get worse. If the government continues to pursue these stimulus-type policies that are just stimulating bigger government and a less efficient economy, then we're going to keep losing jobs. And, the jobs that we're going to pick up are going to be non-productive jobs that are going to diminish our competitiveness and not enhance it.
As you know, Peter, many of the people in these tent cities have had jobs and a roof over their heads, and these are not your normal homeless. I wanted to get your comments on the expanding tent cities across the United States, because this is what we saw in the last depression, is it not?
Yeah, and it's a shame, too, to have people, living in tents when we have so many homes that are vacant right now. We have a record number of vacant homes. I mean, there are more unoccupied homes sitting vacant than ever before. I mean, the government has foreclosed. Fannie Mae owns about 65,000 homes that it foreclosed on, and they're sitting there empty because they don't want to sell them, because they don't want to push prices down, which is ridiculous. I mean, why don't we let real estate prices find their natural level, and why don't we find, that way, there'd be houses available to be rented to a lot of these people or to be bought. We don't have a problem of a supply of housing. We've got a lot of houses. That's one of the benefits of the housing bubble, is that we have a lot of houses. The problem is that they're still too expensive because the government is trying to artificially keep their prices at levels that the market really can't bear.
Let's talk about the government entering the landlord business through Fannie Mae and Freddie Mac. Who was the genius that came up with this idea, and how disastrous a policy will that ultimately be?
Well, look, the governments, they just do one stupid thing after another. I mean, first they inflated the housing bubble. I mean, we never would have had a housing bubble if it wasn't for the Fed and if it wasn't for Fannie and Freddie and if it wasn't for congressmen or senators like Chris Dodd, who kept it all going. But so they created the bubble, and now it's burst, and they're trying to find ways to blow it back up. And they're trying to prevent markets from correcting. I mean, one of the problems with our economy is that we have interest rates too low and real estate prices are too high. And I know for a lot of people who own homes, they hear me saying, well, real estate prices are too high. I don't want my house to lose value. Well, the problem is it never should have gained value. All that appreciation that took place between like 2001, 2002, and 2007, it never should have happened. It wasn't real. That was the problem. So real estate prices have to go back down to a real level, to where they're actually affordable for buyers without government subsidies and artificially low interest rates and, no down payments and tax credits. We need a real market. But the government is trying to prevent market prices. And so what they want to do is they're foreclosing on all these houses, but they don't want to sell them. Because in order to sell them, they have to slash the price, because that's where the market really is before you can have an actual buyer. So what they want to do is try to find ways to keep them on